And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Well, welcome to it. I'm Stephen Grootes, and of course, as expected, the Monetary Policy Committee of the Reserve Bank cutting interest rates by 25 basis points today. I made the point a couple of days ago, maybe 2 weeks ago now, in which if the Reserve Bank has a mandate to stop inflation from going over 6%, it would also have a mandate to stop it going below 3%. I realize that inflation is the thing you want to avoid. I understand that. But I'm just wondering if someone is going to make the case that with inflation at just 3% in December, we're actually in danger of having inflation that's almost too low. And I was thinking about that a little bit again today. Now, on one level, I think there are going to be people who are going to say, and I think with some justification, the feeling is going to be, actually, the Reserve Bank is missing an opportunity here to cut interest rates a little more aggressively, a little more quickly. And I was surprised, actually, that two members of the six-member Monetary Policy Committee wanted to keep rates on hold. I mean, what are you expecting to happen if you keep rates on hold? But then, of course, and this is the other side of the equation, and you almost know what's going to come out of my mouth at this point, when we start talking about the medium-term outlook, how difficult it is to assess President Donald Trump and the threat of tariffs and all the rest. And I was struck by the very the staging of it, if you like. I mean, impressed by the staging of it on one level, is that the governor today, Lesetja Kganyago, as he's making the announcement, says, look, interest rates will be cut by 25 basis points. Takes this sort of breath and 2 seconds later starts talking about a modelling exercise the MPC conducted about what would happen if the US did start to institute tariffs of 10% on products from all countries around the world. There was a response, and what would happen after that. And clearly he's trying to say something. He's choosing his sort of loudest moment, if you like, the moment of maximum attention to do that. I thought that was very interesting. I thought there's quite a lot going on there, and quite a lot that we should be paying attention to. We'll get different views on it as we go through the show together this evening. I don't know if you've got a strong view on interest rates. You're absolutely allowed to. I mean, I know some people who say they don't have debt, they want to keep interest rates kind of where they are or even a bit higher. But for most people, really, trying to do anything in the economy, you do need interest rates to perhaps be a little bit lower. 011-883-0702 and 021-446-0567. You might be in a position where you're trying to sell a house, actually, and you just want interest rates to be a little bit lower because you know that means you'll get a different price for it. You know, a better price for it. And that's what makes it so interesting. Old Mutual, as you know, they're starting a bank. And I was sort of reminded today, you'll hear from their incoming CEO, Clarence Ntengengwe, a little bit later in the program. He was the Prudential Authority saying today they've sort of cleared him. If you're going to be the CEO of a bank, you have to go through the Prudential Authority first. That's all happened and tick, tick, tick. But I was reminded that most of the banks in South Africa, the sort of bigger banks, are quite old. And if you go through their histories, you'll find they didn't really start as a full-service bank. They did this first, then they did that, and then they sort of moved on to that. Old Mutual, of course, massive group, they can kind of start with all at once. But I was just interested in that, and then how they're going to start as well. The other big story, of course, around electricity tariffs. And before we even start talking about electricity tariffs, let me just make this point, and I think I've said this to you before. The current NERSA booklet for electricity tariffs in the year 2025, just the booklet of tariffs is 60 pages long. Now, when you've got a booklet that's 60 pages long of tariffs, and I understand that electricity tariffs is a very technical area, just know that I do think maybe we need to sort of start again somehow. I'm no expert on the subject, but 60 pages of tariffs, no wonder it's messy and complicated. And I just can't help but think there's got to be a different way. And I suspect maybe we're just not moving quickly enough to what I think the new model of electricity is going to be for many residential areas. And I don't just mean, middle-class people or richer middle-class people, but people who produce their own electricity. The prices of solar power are coming down, and they'll continue to come down. And so more and more people will do that. And it may just become impossible to sell a house in any market if it doesn't have some kind of off-the-grid solution for electricity, especially, I would suspect, in places like Joburg. And then just a reminder of how movements in certain commodities just can inflict maximum misery and maximum pain. Coffee prices breaking new records again today. The price of coffee in international markets hitting $3.60 a pound. And it seems that Brazil is actually running out of beans to trade. Well, If nothing I've said about electricity or interest rates scares you, maybe that will. Good to hear your voice notes as well this evening on 072 702 1702. Here's a question for you. At what price point would you stop buying coffee altogether? So at the moment, if you go to, your big coffee chains, you're looking at around 30 to 40 Rand. If you get to 50 Rand, do you stop? At 60 Rand? Have you stopped already at 25? What is your price point that'll stop you from buying coffee and going to the instant stuff? It'd be good to hear from you this evening. 011 883 0702 021 446 0567.
702.
702.
Stephen is on The Money Show.
6 to 8 p.m.
Well, as expected, the Monetary Policy Committee of the Reserve Bank cutting interest rates by 25 basis points this afternoon. The bank's governor, Lesetso Kganyago, reminding us the medium-term outlook is difficult to assess. The MPC carried out that modelling exercise to determine what would happen if, in fact, there is a trade war sparked by the United States. Essentially, as I understand his conclusion, if the US imposed tariffs of 10% on all countries, the end result would be the rand at 21 to the dollar. At the same time today, confirmation that electricity prices will rise by 12% this year. That's much less than what Eskom wanted, but a reminder of the impact of administered pricing on our economy. Gina Schoeman is the economist at Citi Bank. Gina, good evening to you. Thanks for your time on The Money Show. Inflation was just 3% in December. 4 members of the MPC wanted to cut today. 2 members wanted to hold. Is the bank right to be so cautious?
Oh, good evening, Stephen. Thanks for having me. Yes, I would say they are right. They were correct to cut rates, but the cautiousness, as you heard and correctly stated earlier, that modelling exercise about tariffs and global uncertainty, that's really what's got them concerned now. And the government did just return from Davos, where, after the inauguration of Donald Trump as U.S. president and all these threats of tariffs and trade wars, remember, these are also MPC members, deputy governors, MPC SARB members who have lived through trade wars in the past, and it never ends very well for the rand. So I think that cautiousness it's warranted, but they still went ahead and cut, and we think they'll still cut again.
Okay, well, I was going to come to that. I mean, what this does do is give them space to cut again and to be cautious while doing it. In a way, I suppose, for them, the way you describe it, it's the best possible option. It's a cautious option, but they still have space.
Yeah, absolutely. It's what we call a hawkish cut. It sounds quite like an oxymoron. But that cautiousness is just there to remind us that, as a small open economy, South Africa really, it gets swung around by what's happening globally, and the data might change. So right now, we can see the data. Actually, electricity tariffs, as high as they are, they actually have still come out lower than expected. And that means that actually provides some downside risk to the SARB's inflation forecast going forward. On top of that, we had a reweighting of the CPI basket, which also provides a bit of a downside bias. And we've actually had downside surprises in the CPI prints for quite some time. As you correctly mentioned, December was a big downside surprise. You put that all together, and the inflation numbers do allow you to cut again. But again, they are always haunted by the currency, and the currency does have an instantaneous effect into fuel prices and other imported goods. And so I just think they want to be very cautious by nature. And then again, and we have spoken about it before, you and I, Stephen, but there is still this thing overhanging us called the inflation target potentially lowering at some stage. So I think that also comes into their thinking.
Okay, so I understand all of that, but there is a cost to the caution, and the cost is that policy may be too restrictive and it's hampering growth. And if you look at our current our current economic situation, the fact that, the people are suggesting this is the moment where sentiment is right for growth, you may be missing a big opportunity.
Yes, I can see that as an argument, but at the same time, if inflation was not to remain anchored, so if inflation had to suddenly take off, the negative impact to this economy would be far worse than, not cutting. And so this is why we see space for another cut, but they're very close to neutral now, at least the neutral rate that we believe because of what their modeling tells us. But I think it was very telling that even though they're so cautious and they're so hawkish, they still spoke about the fact that in their model itself, they still see rates further down than where they are right now. And I know the governor always says their model is purely a guide. It is not another member of the MPC. But still, according to the data, according to their modeling, there still is space to go further down. So I really just think it's that cautiousness, because at the end of the day, inflation is literally the most toxic factor to South Africa GDP growth. And we can't afford to lose the cyclical tailwind that we've been enjoying from low inflation, which is really helping to prop up growth while we wait for the structural reforms. And if they take that away, well, then that 2% or around that for 2025 GDP growth, that's going to start getting downgraded.
It would seem to me that one of the big problems central banks are going to have in the next little while is that Trump has promised this and promised that with regard to tariffs. But if we go 2 months from now and he keeps saying the same thing but doesn't actually do it, what do you do? At some point, you can't just... At some point, you have to sort of, this is a crazy thing to say, you have to just ignore what the President of the United States is saying about something that's fundamentally important to your job as a central bank governor. But at some point, you have to stop taking him seriously if he does nothing for another 6 months. Absolutely.
But that's where we have the benefit of listening to the Fed. So the US's own central bank has also cited some caution around, what Trump might do or might not do. But they've also said, as they said this week, that they will actually just also look at the data. And despite what is being said about tariffs, if the data allows them to cut again, well, they will do so. We are still looking for a Fed cut in May at Citi. I think the markets are more around June. But if the data allows the US to cut, and they go and cut despite the fact that their president is still going on about tariffs, it still opens many opportunities for other countries around the world to cut again simply because of the capital flows from the US cutting. So I do think the Fed is probably going to be a very good yardstick for us to follow in terms of their narrative of how they think about tariffs coming out of their own country.
Gina Schoeman, thank you so much. Economist at Citi Bank, really appreciate it. Well, this was quite amazing to me. As the Monetary Policy Committee was making this announcement this afternoon, another announcement which would get almost as much attention came from the National Energy Regulator. They were explaining that Eskom will not get anything close to the 36% it had asked for. Instead, tariffs will increase by 12.7% from the 1st of April. If you buy your power from a municipality, it will only come into effect from the 1st of July. Chris Yelland is the energy analyst and managing director at EE Business Intelligence. Chris, good evening. We all know Eskom wanted a lot more than 12%. It also announced today it had made big profits in the first 6 months of its financial year, 17 billion rand. Will it be able to sustain itself with a 12% increase?
Well, according to NERSA, yes. Because they are tasked with not only looking after the interests of customers, but also with the interests of the sustainability of Eskom. Of course, it's going to put Eskom under, and it should, rightly so, put an Eskom under massive pressure. And, the Auditor General, released a report yesterday to the Parliamentary Portfolio Committee on Energy and Electricity, which was absolutely damning about the lack of controls, the loss of controls, and business processes within Eskom, and highlighted, the extent of, maladministration and corruption, particularly, for example, around the issue of what is known as ghost vending. Now, ghost vending is it's like printing counterfeit money. They produce counterfeit electricity tokens. So instead of buying electricity tokens from Eskom vendors, you buy them from these counterfeit operators, sell you these things at a discount. But the loss to Eskom, I estimate, at 27 billion rand a year. Now, these kind of losses, as a result of this loss of control of processes within Eskom, as a direct result of fraud within Eskom, by the way, are passed on to the customer in the tariff. These are one of the costs that Eskom incur, but they recovered from paying customers in the tariffs. Now, if we were to root out all of this kind of stuff that was identified by the Auditor General yesterday, I think even the price of 12.5% is too high. 12.7% is too high. But as you say, it's going to put Eskom under massive pressure. And frankly, it should put them under massive pressure to get their act together and put their house in order. That's what that's what the kind of pressure is needed. If you just allow business as usual, you allow people to carry on doing these things, you don't get down to it and stop it, it'll just carry on forever. You've got to put them under pressure.
It's such a strange thing. With a straight face, you have a big utility like Eskom saying, we need 36%. And with a straight face, you have a regulator like nurses saying, you will get 12.6%. I mean, it seems ludicrous. At some point, we have to stop trusting someone.
It actually points to complete failure of the relationship between the regulator and the utility that it regulates. And, the questions are asked, is Eskom just, asking for a high increase on the expectation that it's going to get a lower increase? The higher it asks for, that maybe it gets a better increase, even though it's going to be cut to hell. Is it just a negotiating tactic or not? Well, Eskom would argue that it's not just a negotiating tactic. They've worked out their costs. But I think the question is, are these costs efficiently and prudently incurred? And that's what nurses got to decide. Eskom is not just allowed to recover all of its costs plus a return on it. It's only allowed to recover its prudently and efficiently incurred costs. I think there's a lot of fat in the system, a lot of fat. Primary energy, staffing costs, operating and maintenance, that's the operations of the business, which includes losses due to non-payment, writing off of municipal debt, ghost vending, and a loss of control over those business processes, all of which, by the way, were highlighted now by the Auditor General. This is really now putting the screws on NERSA to disallow this kind of expenditure or losses to be passed through to the customer.
You talk about the corruption in the system, the ghost vendors, the counterfeit vouchers and all the rest. We know, of course, about illegal connections as well. And what all of this suggests to me, one of the things it suggests, there's a lot to it, but that electricity tariffs do not enjoy legitimacy among most South Africans. And the reason for that is they're very difficult to understand. The price of electricity has gone up quite dramatically. Yeah. I would suggest that the decision by the electricity minister, and he and I had a conversation about this on the Money Show, to suspend Nhlanhla Gumede, the member for electricity from NERSA, just as this tariff process was starting, doesn't help that either. But when you have Eskom saying we need 36% and getting 12% and still surviving, the legitimacy in the electricity tariff is undermined still further.
Exactly. There is a clear lack of trust and disbelief, that people are acting properly. And I think what needs to happen is that, by disallowing clearly fraudulent costs that are being passed through to the customer, it puts the pressure on Eskom. It's uncomfortable. It's going to be enormously uncomfortable for Eskom. But it's the necessary medicine in order to reinvent itself. But look, there is restructuring of the industry taking place. And this is one of the reasons why I think this ghost vending is now becoming highlighted. And this is the restructuring of Eskom into generation, transmission, and distribution makes these distribution losses stand out like a sore thumb in the financials of Eskom distribution. Whereas in the total Eskom, this big amorphous Eskom, these things can get lost. But when you break it down into generation, transmission, and distribution, it becomes more transparent, more noticeable, and more accountable. And I mean, the fact that Eskom recently announced this 1.8 million prepayment meters that are vending through counterfeit tokens, it has been going on for years, but it's only been announced now. It was announced when they did this software upgrade to the prepayment meters recently. And I think it's becoming highlighted because it is becoming more and more obvious in the financials of Eskom distribution now. And that's actually what the restructuring into generation transmission is actually all about. It's about making this thing problems more visible instead of hidden in the big amorphous mass. So the restructuring of Eskom, I believe, is unbundling of Eskom is very important.
Chris Yellen, thank you so much. Energy analyst, managing director at EE Business Intelligence. Well, electricity tariffs, very complicated, very technical area, but vitally important to inflation and to the life you live as well.
The Money Show.
The markets.
Graham Kerner's at the Kerner Perspective. Graham, repo rates, I mean, there's a question of whether the bank could have had a bigger cut today. Is it missing a gap to perhaps cut interest rates at a convenient time?
Stephen, yeah, I think, Gina obviously is the technical and the competent one, but I do think so. And I was looking earlier today that, if you look at inflation to prime or inflation to the repo rate, we are way out. So, respectfully, I understand all the anxieties and I have tremendous respect for the SARB and the committee, but I do feel we started this cutting cycle with interest rates far higher. So if you think, for example, the Fed fund rate sitting at 4.5, after today, you've got the repo at 7.5. Our inflation rates are not that different. So I respectfully feel that we are behind the curve. Maybe we should have started with 50. And I think we worried about possible future inflation rather than worrying about what the models are saying. Because right now, with everything that's going on, barring NERSA and all the other cost push factors, inflation is very much under control, at least demand side inflation.
It's been interesting looking at, it's an interesting perspective. It's been interesting looking at the JSE this week. A roller coaster around most of the world because of DeepSeek. And yet our stocks have been fairly steady. The currency's steady too. I mean, would have been the place to be this week.
Yeah, it's almost like a shield. Maybe, we just don't know any better. But, I mean, obviously, Stephen, there's been a lot of volatility in Naspers and in Richmond and in MTN and in Anglo-American. But if you look at, the breadth of what we hold for our clients, sort of a lot of those SA Inc. stocks and a lot of the value-oriented stocks, they've been resilient. And interestingly enough, obviously you see a little bit of a sell-off now and then, but very light volumes, not aggressive selling. So I agree with you. I get the feeling that SA Inc. stocks are actually holding up very well in what is a sea of chaos, frankly, with all the rhetoric that's coming out of the new Trump administration.
One of the features of the last couple of days has been platinum stocks, PGM stocks. The last 2 days, I think it is, they've had very good days. Obviously, the platinum prices have been a bit of a roller coaster themselves, but certainly the last couple of days very nicely.
Yeah, if you look, Amplat's had a fantastic day today, and all the platinums actually, but them particularly. I think if memory serves, both platinum and palladium were up over 2%. Gold was also firmer. That took the likes of GFI up nicely. So, yeah, I think there's a growing sense, and one that I share, that the world is precariously placed for PGM supply. We've kind of had the view that, demand has been contracting courtesy of, the move to EVs, etc., and supply is steady. But you've seen, you just have to open the newspaper every other week, and you'll see job cuts and shafts being closed in the PGM sector. So we feel that that the PGM supply could actually be a problem in the not too distant future. And if ICE engine demand starts picking up, as we're starting to see, we could all be caught a little flat-footed. And I think that's one of the reasons why the stocks are so much more volatile than the underlying metals, which, if you look at both platinum and palladium over a 5-year view, they've been awful performers. So yeah, I think there's almost like a mentality of, well, maybe it's not such a wild bet, getting some platinum stocks, particularly those that have lower costs of production or have more upside and very little downside. And maybe the likes of Amplat's is in that camp.
Graham, thanks very much indeed. Graham Kerner at the Kerner Perspective. It's just gone 6:30.
The Money Show
with Stephen Grootes.
Well, still good to hear from you this evening. At what point does the price of coffee mean you're actually just going to have to stop buying it? Is it 40 Rand? I mean, we're heading there. In some places, coffee is going to cost you 40 Rand already. Is it 50 Rand? Was it 25 Rand? When a cup of coffee costs you 25 Rand. And I say that on a day that coffee prices on international markets hit 3 Rand 60 a pound. 011 883 0702 021 446 0567. Voice notes too this evening on 072 702 1702. A lot of talk today, of course, about interest rates, about inflation, but somewhere in the middle of it, just the simple price of coffee, just a reminder of how difficult things have been. And despite the fact that inflation is supposed to be coming down, there's specific reasons, of course, why coffee is in the position it's in. A confirmation today, the Prudential Authority has given its authorization for Clarence NextGen to be appointed as CEO at the Old Mutual Bank. It's having what I suppose you'd call a softish launch in the first part of this year. Will open to the public at large a little later. Well, let's speak now to Clarence NextGen, the CEO at Old Mutual Bank. Clarence, good evening to you. So now you have the go-ahead. I imagine there's a mountain of work before you take your first clients.
Oh, yes, there's a lot of work that we need to do, Stephen. And by the way, thank you for inviting me to your show. And part of what we need to do is to just finalize some of the governance issues that we need to put in place, such as finalizing the appointment of our board, the executives, and have board committees. And then immediately we go back to the Prudential Authority and ask them for permission to now start taking deposits. We are hoping that will happen by the end of March. And immediately after March, we then sign up 200 of our staff members, including myself, as well as our Chief Executive Officer, Ian Williamson. And then throughout the year, we have got 3 more phases of, signing up customers. The first phase will be inviting our, staff from the group, particularly in South Africa. And then later on, middle of the year, we will be migrating our customers who are currently sitting on the Bidvest platform that have been amazing for us. And later on in the year, around the 3rd, 4th quarter, we will be going to the general public.
Okay, so you and other staff and Ian Williamson, the CEO of the group, and all the rest will be signing up. Where are you going to get cash from when you need it? Are you going to be scrounging it off your kids like some of us? Or have you got an agreement with an ATM provider already?
Part of the first switch, the network that we'll be using, and we'll be paying fees for that, and you can also use retailers for people who want to withdraw money from retailers. But we have got this massive belief, and I'm quite happy that the Reserve Bank also is pushing for that, it's about time we take cash out of the system and have people use their virtual cards instead of using cash. Yeah.
Okay. No, of course. I mean, obviously that's what's going to happen. The second and third sort of phases. So, okay, employees are you're testing systems for the first time, so it's not easy, although you will, of course, have people who've done it before, I presume. Then you go to other phases. Are you going to invite current clients of Old Mutual? Is it going to be invitation only? How does that work?
Yeah, like I said, when we go to the general public, the first set of customers that we will be, inviting basically is the migration of the current transactional banking customers that we have who on our Bidvest platform. We have got 1 million of them, and about 400,000 of them already are very active, and probably around 300,000 that they just put money and they don't transact on a daily basis. So we have got quite a sizable customer base that we will be migrating into our new platform. Of course, we believe that we will love all of them, 1 million of them, to move over. But at the end of the day, they do have choices.
No, of course. It's interesting how you start a bank now in 2025 as opposed to how you started a bank sort of 50 years ago. Because banks then would often start with one type of account, just give permission to take deposits, for example. You're offering a full suite of services quite quickly, but that's also based on your size, the fact that you have the ability to do all of that. What I'm trying to get to is that banking in 2025 is so different now and so competitive now that you're coming in at a very interesting time.
We actually came in a little bit earlier than, a lot of people haven't noticed. Old Mutual have been doing banking activities, particularly in our business called Old Mutual Finance, since 2007. And it was part and parcel of our integrated financial services strategy then within the mass market space before it morphed into this big strategy for the group. So we have been in banking for almost 18 years now, and we have built up a good book of about 16 billion rands from an unsecured lending perspective. And the transactional bit that I spoke about, which has got a million customers, we started that almost 9 years ago. So we have been there and we have learned quite a lot. We have been observing, we've been consuming data in terms of how they behave and how they want to be served and the like. So we are not necessarily coming late. We have been in the party for the longest of time.
So obviously, like everybody, it'll be sort of mostly electronic. You'll try and keep cash to a minimum, of course. Is that all going to have an impact on how many people you actually employ? Based on all of this experience, you might be able to do it with quite a small number of people.
Absolutely. I think you have just answered your own question, Stephen, on that. We have been saying this, that we want to be a digital-first bank. And if you look at, digital banks across the world and digital-first banks, majority of them, they've got very, very, low staff numbers. And because people do banking on their own, they don't have to go into a branch. If they have got a question, they just simply use live chats on the app to communicate with their bank, and their questions are answered. The reason why people go into branches, by the way, is because they've got a question that they need somebody to answer. If you can do that on a mobile app through a live chat, surely people will not. There won't be any need for somebody to get into a taxi to drive long distances into a branch.
No, sure. Banking has, to an extent, become all about the app. How are you going to stand out in this competitive field? I mean, how are you going to make your app better than other apps? And there are plenty of them, and some of them, I appreciate all of your experience, Clarence, and the experience of the people at Old Mutual. But some of them have been running, very good apps for very large numbers of people for quite a long time. Your app does have to be better than theirs. Well, you have to compete somehow, and that would obviously be the main interface.
That's exactly it, Stephen. Our app, it's what we call sort of a personal banker for customers. So you have to deliver total experience that is quite exciting for the customer, and that is very interactive, easy to use, and the customer must be in a position to sort of have all their needs met through that app. So it's about the total experience. It's not about how beautiful your app is, the look and feel of it. It's about the ease of use and it's serving the needs of the customers. And for us, that's our focus. Make it the best app in terms of experience rather than the looks and feels about it. I've seen a lot of apps that are great when you look at them, but when you start interacting or engaging with that app, you just tear your head off instead of your hair.
No, sure. I know what you mean. A lot's going to change in the banking sector over the next few years, and you'll obviously have to keep up with all of that. But people talking about, blockchain technology, things like that. Are you quite excited, Clarence? Not just that you're involved in this, but it's an exciting time to be involved in banking. You don't get to say that all the time.
It's absolutely exciting. And, I spend time with our CIO as well as our Chief Technology Officer. They are so excited about these things. So they just simply, call out these things. And I just sit in awe because I'm just a businessman. I'm not designed into technology. But listening to them, I see the passion that is coming through them. And I can tell that the future will be great for Old Mutual because we will be investing in all those technologies in order to keep up that total experience for our customers.
Clarence, good to talk to you. Thank you very much indeed. Clarence Natengwe is the CEO at Old Mutual Bank. Well, we'll watch it very closely. It'd be very interesting to compare apps. I'm sure within hours of it all going live, people will be able to compare the apps side by side and sort of tell you about what's happening. Good to hear from you tonight as well. As your experience of banking, are you expecting it to improve? 011 883 0702 021 446 0567. 10 minutes to 7.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Well, an announcement in Geneva today that Elite Telecommunications has now received a big investment from Meridian. It'll allow it to connect 500,000 low-income homes to fibre. In other words, around 2 million people, probably more than that actually, will now be getting uncapped high-speed internet in their homes. And the sort of fibre revolution is one of the things happening very quickly that we don't pay nearly enough attention to. All of the things that flow from it are fascinating. The CEO of Elite Telecommunications is Vuyani Jachana. Vuyani, good evening. It's been a long time since we last spoke, but you may have fewer air miles now than you did then. 500,000 homes, that's a large number. They must be making quite a substantial investment in Elite Telecommunications.
Yes, thank you very much, Stephen. Thanks for having me. Yes, we're excited about the development because we have been developing the business on connecting homes in the townships and in the rural areas, specifically focusing on fiber deployment with Meridian coming in. it's a big commitment because they've committed to underpin our business plan and to come on board as a shareholder, which is a good injection that will allow us to deliver on our objectives.
When you do 500,000 homes, there are obviously lots of different ways to do it. So in some cases, I presume that you're actually digging and connecting them to a cable. And in some cases, now that's much more reliable. I mean, I realize you can have heavy flooding in KZN, but otherwise they're pretty safe. If you use poles, it's cheaper and quicker, but easier to damage. Which is the best way? I mean, do you have to do different things in different places?
Yes, we're predominantly using aerial fiber, which is we're using poles because they give us the ability to deploy faster, but at the same time, we're able to string the cables in what we call mid-block, which is you run at the back of the homes to keep the aesthetics. So it's faster to deploy. You can do large-scale deployment, but also its economics are much more better. That allows us to put a proposition in the market like pricing that's affordable because the cost to connect is a much lower than when we're digging underground.
And of course,
so we're focusing a lot on the underlying economics. Yeah.
I mean, and of course, there's no inherent value in fiber. So there shouldn't be any kind of sabotage or theft or anything like that. There must be a cost. I'm sorry to interrupt. There must be a cost per home. Now, again, it'll depend on the area. But I presume that in some places, it's much more expensive to do one block of homes, let's say 10 homes, than it is in another place. It might be where in the country it is, might be how rural versus how urban, might be where the sort of nearest connection is. But is there a rough figure that you use in terms of how much it costs to connect one home to fiber?
Yeah, look, first and foremost, there are a number of factors you put in place. For example, the distance of the area you're targeting from the broader internet backbone, which is backhaul. So the further away you are, so you've got the cost of backhaul. You would know that internet, you pick it up from Hazefontein in Cape Town, Mtunzeni in Durban, and in Gqeberha now with the new cable, undersea cable being deployed there. A lot of this runs along the national roads, N3, N2, that is N6. So the closer you are, your backhaul costs are lower and you're able to soak your cost better. But at the same time, one of the key areas per area is what we call the density factor. So the more dense the township or the cluster it is, then you can achieve more homes with 100 or let's say a kilometer of fiber, so to speak. So density factor is key. The rest of it, poles and the cost of labor is the same. So you have to continue to optimize the cost to connect. So it will, in some of the big guys, it's over 5,000 per home, but we are pushing through to try get closer to sub 3,000 per home by improving the way we connect. But obviously, if you have got volumes of homes to connect, your supply chain negotiations, because you have got bulk buying. So it's a number of things. Are you connecting bulk? Are the homes dense enough? One of the things that lowers our cost to connect, for example, is that we don't do just homes passed. We just connect a block or like a ward. We connect all of it in a single track roll. That makes sure that there's no cost of going back to connect each home. You have a single site establishment, you connect, you soak the ward, and then you get out of it. So there are a number of drivers of cost to connect. So we have to continue to optimize.
Okay, so 3,000 to 5,000 Rand. The aim is 3,000, currently around 5,000 Rand. Obviously, there are variables to that, and I understand that, and thank you for that clarity. How long... So as I understand what's happened in sort of suburban areas which got fiber first is that someone would roll out the fiber and provide the fiber service, and they'll get their money back from the internet service providers. Are you using the same kind of model? So it's not the people whose houses are being connected who are paying for it up front. That would probably be impossible considering the market. But it's actually the ISPs that are paying you back over time.
No, we're using an integrated model where we both wholesale infrastructure provider, which is also open access, but also integrated with an ISP. Because when we go into a ward in a township, we actually connect every home. So we actually have the ISP module embedded in. And our optic fiber service is provided on a prepaid basis with a different pricing structure per product. So you can buy a service for one device, for 3 devices, for 10 devices, for 15 devices, or you have a traditional model of having your own SSID in the home. So because we do that, we have an integrated module. So the people who pay us are the end consumer, is the homes. That's why we're investing a lot in understanding the internet use cases in each home, so that we can actually deal with the issue of no contract, but rather if the internet use case is strong. So we don't see a need for contract because people will use the internet because the internet use case is strong in that family. So we have an integrated ISP model.
Okay, no, that makes sense. So then, I mean, I presume it can also take some time to get your money back. That's why capital is so important. You need to invest the 5,000 Rand per house. You need to provide the ISP, so there's another cost to you there, I presume. And then after that, you've got to sort of get the money back, and that will take quite some time. I mean, do you have any sort of time scale of how long that investment takes to sort of pay itself back?
So it depends on your uptake rates. So the service uptake rates, we have seen in our service uptake rates north of 80% in the areas where we've deployed, say in Tanzania, and we're busy deploying in Umtata now. So it depends on the uptake rates and the product mix that is being taken up by customers. One of the things we're focusing on in our capital raise program, we look for impact investor who understand that the return on investment is critical, but also the social impact is as important as well. So we are a commercial business that has to run a very strong company with good returns on investment, but the work we do must have a big impact on society. That's number one. Number two, we look for patient capital because a fiber investment is a 25-year lifespan, if not more. So therefore, you have to get a partner who's patient about returns, so that you're able to build up the business much more stronger. So the horizon is similar to any other fiber operator, but as we bring up the uptake rates, we think we can bring it forward. So we think a 7-year view in terms of initially getting to a break-even point, depending on scale, is what we are working on. But we think we can bring it forward a bit based on the uptake as we push the internet use cases. So, but patient capital is key. Fiber is a 25-year investment. It's got lifetime of 25 years. So you've got a lot of opportunity to monetize. And a partner like Meridian, Family Foundation, insurance companies investing in us are the kind of providers of capital that fit our model.
And it completely changes the lives of the people who now have access to the internet and high-speed, reliable internet as well. Voyani Jachana, good to talk to you again, sir. Thank you very much indeed. The CEO of Elite Telecommunications, just after 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to the second hour of The Money Show. We'll talk about cybercrime in just a moment, and in fact affecting several websites, programs that produce websites, even in one case a blood donation drive. I mean, who hacks into a blood donation drive? Got to be something wrong with you, frankly, if you're doing something like that. We'll talk also, I'm going to talk about the price of coffee, but the price of olive oil is one of those things where if you actually go into a supermarket and look at the price of olive oil, you're probably going to need to have a quiet moment, sit down maybe, and just try and recover from it. We'll speak to a small company, and we're focusing on small companies, of course, that have gone into this market and how they do it, won awards for it. I'm always intrigued, and I have to say, I've never done this, but why some olive oils are more expensive than others, and it cannot be because of the taste or the texture, or what's that word of the soil where wine grows, the terroir of olive oil. Oh, for goodness sake. There's got to be some kind of reason as to why. We'll focus on that in the next little bit. I'm sure, like me, you've been watching slightly aghast sometimes slightly with a sort of smile on your face at what's been happening with NVIDIA over the last few days, and particularly on Monday, Tuesday, losing 17% of its value, $500 billion, et cetera, all because of the Chinese AI model DeepSeek. Well, we'll talk about how you invest in these moments. How can you still make money out of artificial intelligence? And one of the consequences that I had not foreseen on the first day, but certainly we saw the next day, was what happened to shares in energy companies in the US and how they just dropped so dramatically, mainly because the assumption, and this is all about assumptions, the assumption that there'll be a huge amount of energy demand to power the microchips that were thought to be necessary for AI, and how that's changed. So then, if you're holding shares in an energy company and this happens, the assumption changes, what do you do? The fundamentals, really, of investing in investment school this evening. Good to hear from you as well on 011 883 0702 021 446 0567. At what price do you stop buying coffee?
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
Well, you know, Cisco, the network company, research from them saying cyber criminals can remain undetected in corporate networks for an average of between 17 and 44 days. It's sort of just over 2 weeks to just over a month. And it would appear that they've actually been quite active in the January period. WordPress, a program, a service used to create websites. The US blood donation drives, which is an astonishing thing to try and hack. I mean, what are you looking for? More corpuscles. Siphumelele Zondi is our tech expert, joins us on a Thursday. Siphumelele, good evening to you. How are hackers able to stay in a network for quite so long? So much money is spent on cybersecurity. People, have long careers in just this one industry, and yet hackers are able to stay in these networks for a long time.
Hello, Stephen. And yes, they're getting more sophisticated. And as you rightfully say, 17 to 44 days estimated by Cisco. So it's social engineering, really, because what they do is to figure out a way in. And we often hear that a way in is through an individual who works for that particular organization unknowingly, because they might get an email, right? And when they get that email, they click on a link and suddenly they're in. And then they try to then figure out who's who by mimicking the organization's IT. This is when then the organization's IT needs to be strong in its detection of who the infiltrators are, because when they're then mimicking IT, they're trying to figure out the systems and who's who and how things operate, and what can be done and who actually stores the data that they may need, because and that's where they need to get to, and that's when they then once they feel they're comfortable with that, and then they perhaps start to lure that individual or those persons that they've identified as the most important persons that they need to go towards in terms of their accounts, because they wouldn't know that this is Stephen, this is what they look like. They just look at accounts by mimicking the organization's IT, and then they attack once they are comfortable. So it's all social engineering that involves them pretending to be the organization's IT, and we generally don't figure it out if we work for, because you think it's your IT being a nuisance. Meanwhile, you've been hacked.
Sure. I mean, yeah, and I understand why people feel IT's been a nuisance. I've had that feeling, but you've got to be very careful. The US Blood Service, I mean, for the life of me, Siphumelele, I can't see why someone would want to hack that. I mean, in most cases, donations are free anyway.
Totally, but it seems like it has happened. They don't know who has hacked them. This is the New York Blood Center, which is the largest in the United States of America. They say it's impacted on 500 hospitals in the United States, and they need to get blood out. They've taken a lot of the work that they do offline, and they are now doing things the good old way. And they're saying they're trying to get their systems back, and they have gotten a lot of it back, but they're working on being fully back so they can be properly online. It's not clear why they do this, but we do know that a lot of hacking is data collection that sometimes gets sold later, and it might get sold in the dark web. It might be a ransom. They might actually come back to the organization and say, well, in order for you to get this data back, then you need to pay a certain amount of money.
And if you run your website on WordPress, I mean, that's difficult too. WordPress, a lot of people use that.
Oh, totally. About 10,000 websites seem to have been infiltrated. And what seems to be happening, because it's a website that you would otherwise trust, a website that you would otherwise know about, and maybe that you frequent. What seems to be happening there is that with about these 10,000 websites, you'd go there and you think there's a Chrome update that's appearing. You click on it thinking that it's a Chrome update, and meanwhile it's infecting you and your systems. So if you see a Chrome update on a website that shouldn't have it, don't click on it, because about 10,000 websites that use WordPress have been infiltrated. And these are usually the websites that you would otherwise trust, that you would probably even visit frequently. So that's how those hackers have gone into WordPress.
Sure. There's sort of, DeepSeek's been the story of the week for all sorts of reasons, and we'll focus more about it in about 15 minutes in investment school. But big questions around how it was done and whether data was stolen to do it. And Microsoft seems to be suggesting that, in fact, DeepSeek could have stolen OpenAI data, and they're now investigating that. I mean, that would then lead to the suspicion this was a data hack, a cyber attack of some kind as well.
Well, Microsoft hasn't said how they believe this has been done, but I believe what could be confusing them there is that how did they manage to build this tool so quickly and also so cheaply, and the belief is that they could then have been building it based on a foundation of something that already existed, that already had its own data. But how would they then have received that data from a predecessor that already existed? So that's why there a lot of suspicions that are being thrown around on how it could have happened so quickly and in a manner that is affordable, because a lot of money was being thrown into a lot of these AI tools and organizations in the United States of America, as you know, and a lot of them started to lose money as investors pulled out, and as they said that, hold on, they managed to do it for a fraction of the price this quickly, and they work as well as you do, if not better sometimes. But so that's the question. Could they have then built it on a foundation of something that already existed? And if so, then how did they find out how that previous tool, including OpenAI's tools, if that's a possibility, and then built on what was already there in order for them to then better what they came out with?
Okay, sure. I mean, this is one of those things where people who support China are going to say, well, of course the US is saying that they don't like what we've done, and people supporting the US are going to say, well, of course China stole it. Neither side will really provide evidence one way or another, or the evidence will be disputed anyway.
Well, there's no evidence right now, and the thing is, it's up to either of the two sides to say that this is the evidence. That at the moment it's just all suspicion, because when this tool came out, in fact, it seemed like the United States of America was going to be a leader in AI. No one was catching up to them. Suddenly this tool out of nowhere, out of China, but comes almost unexpectedly, and it is better than anyone ever thought it would ever be. Even those that were trying to imagine what it would look like. So until there's proof that's provided that, listen, they did steal data off an existing tool and then they built on it, it's all speculation right now.
So I would imagine hacking is quite a sort of competitive thing, and people will hack each other as well. And hackers, people who do this professionally are hacking each other.
It seems that way. They're hacking each other, basically trying to prove who is better than the other one. And it seems like it's the more expert hackers who are trying to hack almost the novice hackers who are still trying to get in the game. And as they are trying to infiltrate certain systems, they get hacked, so they don't do what they were expecting to do. So yes, it seems like there's competition as well. And I suppose that in terms of the industry as well, because we do know that there are good hackers, and sometimes they do say that organizations like governments and the financial sector, they also need to start employing hackers, because there is a good side of hacking, because hackers can protect your systems because they know how other hackers think as well. So it basically all comes from that, because they're basically trying to prove that they're better than other hackers, and so they start attacking each other as well.
Sure. Thank you very much indeed. Siphumelele Zondi, our tech expert. Fascinating just to see how all of this plays out. And AI and hacking together, you can just imagine all of the difficulties that is going to create. 19 minutes now after 7.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. There's so many stories that owners of small businesses will tell you. I mean, in some cases, each small business is its own mini series. You know, there's the idea of trying to provide the service or trying to provide the good. There's trying to scale up, the search for capital. The episodes of these stories almost write themselves in some ways. Of course, there are often big differences. And in the end, you often would have the big sort of climax to your mini-series, the moment at which you can see this small business is going to grow, it's going to employ people, it's going to make money for the person who took the risk, the sort of star of the first 3 episodes. Well, one of those stories, one of those companies that has a story like that is Ubuntu Extra Virgin Olive Oil. Its founder is Loyiso Manga, and Loyiso joins us now. Loyiso, good evening. So back in 2019, you decided to start your company. What made you decide to produce olive oil? And I think some people will be thinking, well, I've looked at the price of olive oil in the supermarket. I wish I had started it because it can be so expensive. But what decided to make you decide, actually, I'm going to produce olive oil myself?
Good evening, Stephen. Good evening to you and your listeners. Thanks for the platform. I think the one exciting thing that made one get into it is the niche market, and I think the idea that there were not people of color in the space was sort of a dare and a challenge to myself. I think the wine industry at the time was oversaturated in the alcohol industry, and going into extra virgin olive oil, the reality is that health can never run out of fashion, and this is used on a daily occurrence. Every day people cook. So I think that's sort of what got me in it, and the challenge of penetrating and getting into an industry where people of my color, weren't in. So pioneering, I suppose, was also part of the daring.
Did you have to grow your olives yourself, or did you just have to find a supplier and take it from there? And finding a supplier could be tough too.
No, certainly. I mean, the fun thing was we launched in 20 December and 2019, and we all know 2 months later it was COVID. So it was the best time to start a brand, wasn't it? But I think for ourselves, at that time, it was quite clear that, with government's priorities of sort of getting funding towards this pandemic that people didn't know, it wasn't really their priority to look into things like farming and agriculture and all those things. So the best business decision and strategy at that time was that we outsource the olive oil. So we buy it in, we bottle it, we cap it, and we do all those things. So that worked for them, but now we're quite keen on owning the means of production and getting our own farm.
Next, the commanding heights of the economy. The capital to do all of this, Loyiso, did you have capital already? Did you have to go and borrow it? Did you have to go and find it from somewhere?
No, so 2 years before we launched in 2019, there was a farm available on sale in Porterville in the Swartland, and the owner and I he was quite keen to get out. He was an old man, and we worked so hard in getting funding and 2 years later, we couldn't get it. I mean, we went through all the different government institutions. And I said to him, listen, mate, I still believe in the dream of Ubuntu. I still believe in what I want to do. And he was kind enough to give me olive oil on consignment. And when we launched in 2019, we sold over 800 bottles, which is quite an achievement, given that we didn't have a distribution team. It was still myself. And people were just quite supportive. And that's how we started, through Ubuntu once again, you know. And yeah, that's how we started. And currently now we buy in olives and we press them and we blend it. I blend it myself. So that's the current situation.
I have no idea what the answer to this question is, but what makes one type of olive oil better than another? I mean, does it need to be lighter or darker? Does it need to have a particular feeling to it? Does the sun need to have shone on it at 6 o'clock in the morning with the cloud and a certain thing while there was a cock crowing? I mean, what makes some olive oil good?
So what makes extra virgin olive oil? So extra virgin olive oil, think of it like this. It's a AMG, it's a M3, it's a top range of the olive oil ladder. So the first press, so what makes extra virgin olive oil is that we pick the olives from the trees and we press it and we cold extract it. So there's no heat involved. There's no, additives. There's nothing of that sort. So that's what makes extra virgin olive oil premium. Then after that, you get your olive oil and you get your, it gets lower and lower and lower. So that's how you determine a pure, top of the range olive oil by it being first pressed, which makes it, that's why we call it virgin, because it's the first press of the harvest. Then after that, people would go on and create and press it about 4 or 5 times until it gets to about the canola, stage. So that's what makes extra virgin olive oil, and that's what brings its unique health benefits of, it helps reduce diabetes, it helps with strokes. A lot of my clients actually now have started even drinking a spoon of this in the morning and the evening, and it helps balance out and reduce your high blood pressure. So that's why it's the cream of the crop in the top range of it.
I mean, I can hear you doing the selling, Louis. So, it's a very competitive space, right? There are plenty of people around the world. Some of your competitors will be, in Italy or Greece. Some of them will be in Swellendam, How do you then stand out? I mean, and you would have known that when you started. It's not enough just to make olive oil. You have to make good olive oil, and you've won big awards for it, so you do make good olive oil. But how did you, stand out from the rest of the crowd?
I think a lot of people really admire the story of transformation. They really admire people of so-called color, and I mean, I bring this out a lot because it is what it is, and people really admire that. And I think beyond the olive oil that we sell, I mean, people have just bought it simply because of the journey that we've been through, the challenges that we've been through, and based on that actual fact, that has become our unique selling point, besides the fact that we sell a premium, top-tier, world-renowned and world-recognized olive oil.
It's very interesting because, I mean, there's so much that you have to do. And pricing? How on earth do you price olive oil, Luiso? Because we all know it can be very expensive. And obviously, you say you blend it yourself. So there are a lot of hours to it. There's a lot of careful thought about it. You've got to produce a high-quality product. How do you determine the pricing?
So the pricing is mainly based by the big boys in, your Spain, your Italy, and so forth. There is an international standard, and I think a lot of us would have experienced that last year, 2023, 2024, was the worst year in olive oil history because the olive oil trees could not take the pace at which the climate change was happening. So you'd find that, my supplier, who was harvesting 100,000 liters of olive oil, only harvested 17 because of the pressure, and with that then brings the demand of it. So the prices are simply based by who is doing it the best, and we're quite small producers in South Africa. So the big boys in Europe, they set the standard. So if the crop is good and the harvest is well, it trickles down to us. And I think the prices are now going to at least stabilize a bit because the guys have received some good rains and some good harvests.
And taking the company to the next level, Loyiso, I mean, are you going to need money to expand? Are you planning on expanding? Do you want to keep things as they are and consolidate for a while?
No, definitely. Definitely. We're not happy with the current state of affairs. We experienced having no stock in 2013 for about 11 months simply because of the low harvest that guys had. And my supplier just turned to me and said, listen, mate, I've harvested 10 times less. I've got my own obligations, and we're stuffed. So now we're in a process, fortunately. We've got our application through Land Bank, and Land Bank is working hard with a very competent NEF, and they want to make a deal happen with the DTIC. So we're quite excited about that, and I think it's high time the country gets the first black-owned olive oil producer in the country, and that's at the hands of the Land Bank at the moment. So if anyone knows anyone at the Land Bank, please tell them to look at our application as soon as we can, and maybe in the next year or so you can come and shoot your show there. I think that would be great, wouldn't it?
Loyiso, thanks very much indeed. Only if we get free olive oil at these prices. Loyiso Manga, really appreciate it. Good to hear from you. Founder of Ubuntu Extra Virgin Olive Oil in Small Business Focus.
The Money Show.
Investment School.
Just gone 24 minutes now to 8 the time. Well, of course, one of the big stories of the week, and I suppose you could say really the big story of the week, is what happened starting on Monday, the market reaction to the release of DeepSeek by a Chinese company. And the fact that it shook the assumptions that many people had based huge valuations for artificial intelligence. As you know, the assumption had been that artificial intelligence, the lead was in the United States rather than China, that it would cost a certain amount of money to train AI models in a particular way for them actually to be useful, that you would need certain microchips to do that, and most of those would be made by NVIDIA, and that you would need a huge amount of electricity to power those microchips. Now, DeepSeek shook all of those assumptions. You don't need the electricity, you don't need the time, you don't need the microchips. The result of that was that the world's most valuable company, NVIDIA, lost 17% and a huge amount of money, over $500 billion in value, just was wiped off its value on the US stock exchange. It was an immense thing to watch. The question for you in investment school then is, how do you manage a situation like this? Viv Govender is portfolio manager at Rand Swiss, and Stephán Engelbrecht is a portfolio manager for Mazi NextGen at Mazi Asset Management. Gentlemen, good evening, and thanks so much for your time. Viv, let me start with you. So you've got assumptions, you've got huge values built into those assumptions, and those assumptions are suddenly, I suppose, wiped away. What do you do next?
Well, you must not be afraid of the overreaction, number one. Yes, the Chinese have had some innovations, and though OpenAI claims that this is stuff they already discovered, I think it's quite clear that they've done things that are, technologically interesting. That being said, the US still has the advantage. You can see it right now if you try to use DeepSeek. The delay happening there is quite difficult because of the fact that they don't have the chips to do the inference as well as, for instance, an OpenAI does. And in fact, as we progress over the next couple of years, you're going to see that gap between the Chinese and the Americans widen, because the American chips, NVIDIA chips, are improving at more than Moore's law rate. That means better than that, doubling every couple of years. And that means that, in a couple of years' time, you could be seeing chips sort of the US is using that's maybe 100 times more powerful than what's available to the Chinese. And the next thing is that you must understand that, obviously these innovations that the Chinese have used is, very interesting, but it's still to a certain extent built on stuff that, came from the US, which is, OpenAI claims a lot of it's from OpenAI. And there is some backing to that, because if you do use DeepSeek, sometimes it thinks it's GPT.
Right, okay, I see what you mean. Stephán, do you go along with that? Because yes, you can say China is taking things originally from the US, but the US originally took things that were produced and invented for the first time in the UK, and the US became a much bigger economy. Do you really think NVIDIA could go back to what it was, for example?
We are in very interesting times at the moment when it comes to AI and machine learning in general. And I think from the white papers that was released by the DeepSeek company, DS, they are very, very interesting, very innovative. The academics are definitely very enamored by the clever way of using reinforcement learning to train these models, having the teacher that's, by the way, it's far more expensive than the $6 million that keeps on being thrown around by the media. It didn't cost that. That is just to train the student. But the teacher that sits up high was far more expensive. And the student is where the innovation is coming in. So, yeah, they are definitely disrupting, to my mind, the whole concept of what the market may have thought.
I mean, and Viv, this gets to another thing, right? Which is that once something like this has happened to NVIDIA and to the shares associated with it once, the fact that must shake the sort of faith in it. In other words, it would seem unlikely to me it goes back to where it was just because that uncertainty is no longer 100%. There can be another shock, is the point.
Oh, yes, most certainly. But understand that this price fall that's, like you said, $500 billion down, it took it back to where it was last year, October. So it is, still a company that is still quite, valuable at the moment. And we need to see the next rounds of models come out. We're expecting Grok, apparently, according to Elon Musk, to mean this month or next. With his timeline, that could be coming by the middle of the year, but I do expect it to probably come out in the next month or so. And then we obviously are going to be seeing the next version of whatever it is that, OpenAI is creating as well. And when these models start becoming more widely used, training is just one aspect to it. As was mentioned, the 6 million or the 100 million, whatever you want to call it. But the real horsepower behind this is going to be coming from what's called inference, which is actually using the models. And, Jensen Huang has always said that could be 1 billion times more, computer power needed for that than it was for the training itself. So we need to see whether these models are going to be as much of an improvement as the last ones were. And we're going to see whether or not, the uptake by the international community is going to be as great as these companies are hoping for. At this last, we heard from Microsoft, they're still looking to spend $80 billion building up Azure. That's per year. We still think that $500 billion that OpenAI and Oracle, etc., is putting together may be a bit exaggerated, but that's probably something in the ballpark of what we expect in the next couple of years. And if that is true, then a lot of that money is going to go directly to NVIDIA.
Okay, it's not just this transition that we're seeing. I mean, power companies, energy companies in the US lost huge value as well because the assumption was, and I understand that, the assumptions that we are currently looking at around DeepSeek will change too. Our understanding of it will get better, and a lot of what's been said is being questioned. I understand that. But if you are expecting to have to use a certain amount of electricity to power the next generation of AI chips, and you don't need to use it, then power companies are going to lose value. And I must say, Stefan, my first thought on Monday, once I'd sort of made had that insight, would have been to dump my shares in those power companies. Would that have been the right thing to do?
I'm never a fan of the word dump. Let's say rebalance your portfolio, Stephen.
Okay then.
But I do think that the one key learning, and you could see this in so many of these big technologies across the world, or during time, whether it was commercial flights, whether it was the telephone, whether it was electricity or the internet. There was a point where the market gets way too excited about their technology and they reward the enablers. So that's the power companies and the guys training these LLMs, and they sort of forget about the adapters. But the companies that start to use the technology for their benefit. And I think we're perhaps getting to the point where the value is going to accrue not in the companies that are enabling other companies to use large language models. I think that the assumptions on gross profit margins and usage is perhaps a little bit too aggressive. But the power and the benefits of AI in the wider economy, I think, is being underestimated. So that's why perhaps you must start playing AI not in the tech sector, but in the healthcare sector or in the finance sector. And that is where you must put your focus on, where if you want to play the AI theme.
Viv, I can hear Warren Ingram, our personal finance specialist, in my ears when I say this. But so diversify your AI portfolio would be the argument.
Oh yes, most certainly. But one thing to note is that what DeepSeek has shown us is that the low-hanging fruit has still not been fully exhausted in the AI sphere. So if people were worrying, the main fear until DeepSeek and the most recent developments that come out had been that AI hits a wall. That means the progress stops. And what we are seeing here that progress is progressing, forgive the pun, faster than expected. And if you do see that happening, I think that makes some of the assumptions you had maybe change, but not always in a negative way.
Yeah, I suppose that's the interesting question, I suppose, is what, how all of that works. There are other things that are changing too. And I mean, for example, we've seen huge political shifts in the United States, and it was interesting to watch markets ahead of the election. And then when the result came, we started to sort of see, what was going to happen. But when you see big shifts like that, and particularly the Reserve Bank governor today was talking about, how concerned they are about tariffs, and I thought that was very interesting. Stefan, you do have to manage that kind of risk quite carefully. And what we're seeing in the world, unfortunately, is big political shifts one way or another. And that does mean that you have to be quite careful with some of your investment decisions, and they will affect AI as well. They will affect, what happens with NVIDIA. Different, we've seen Trump, of course, getting very involved in AI recently. The point I'm trying to get to is when you've got a big transition like this that we've seen in the US, you need to manage your investments there very carefully too.
Yeah, absolutely. And it goes... Listen, the way I always think of politicians trying to stop business from either exporting or importing products, it feels a little bit like the little boy who tried to plug the holes in a dike with his finger. The moment when you try and stop one thing, the business will find another way of getting through. Trump is, yes, he's going to be impactful. Yes, he's going to make it difficult for some companies. But the genie of AI is out of the box, and now it is how are companies going to use it, how they're going to adapt to it, and I think it's a global phenomena. And whether it's a US leadership, I don't know. They really want that. But as you can see, there's always ways for China and other developing and developed countries to catch up.
Viv, I mean, investors obviously need to pay more attention to geopolitics than they used to. Certainly for the last little while, and we've seen it become a much bigger risk now. But you need to understand. Some people will say you need to react very quickly. Your first response to the first question about NVIDIA was to not respond quite so quickly. How sort of sanguine, how careful do you need to be about responding to these big shifts we're seeing?
You need to be very careful. And you must understand that the politicians aren't looking at this just as an economic factor. AI is a big enough shift in technology. It's like the Industrial Revolution. Before the Industrial Revolution, a bunch of countries are pretty much the same. After the Industrial Revolution, you had colonizers and colonizees. And that's the kind of situation that you might see when you have AI, really coming into its full flight. It's more about, trying to beam. I mean, even today we saw reports from the Anthropic Dalia Modi basically talk about the fact that he doesn't mind China getting all the benefits of AI, just doesn't want them to have the military benefits coming through. And I think the military aspect to it cannot be overlooked. I think the US is not just looking at this as a point of, this is about trade or this is about the economy. It's about actual military dominance and, global dominance for the future. And I think that is what's the difference between this and maybe earlier technology we saw like the internet, etc.
So you've got to look at underlying trends. So for example, President Trump used the phrase drill, baby, drill in his inauguration address, right? He talks about fake climate change and things like that. And he's wrong on the facts when he does that. At the same time, though, Texas now gets 30% of its power from solar. That process is obviously going to continue, Stefan. Donald Trump doesn't stand in the way of that because that's just raw economics nowadays. That power is cheaper. Therefore, Texas one day will probably become 60 to 70% solar, and so will the rest of the world, particularly if you consider that this is Texas we're talking about.
Yes, but the one thing though is how much they're going to shoot themselves in the foot with their tariffs. I mean, the 30% solar from Texas. The majority of that was built with solar panels made and developed in China. So Are they going to put tariffs on that and make it more expensive for Texas to go through that development? Because once it's installed, it's difficult to compete with that solar. So they may just have to pay more for that, depending on how Trump will use his tariffs. But there is a big risk with tariffs of shooting yourself in the foot. While trying to prevent one thing, you are stopping something else to happen as well, or allowing something else to happen.
We're speaking to Stephán Engelbrecht, Portfolio Manager for Mazi NextGen at Mazi Asset Management, and Viv Govender, the Portfolio Manager at Rand Swiss tonight. Your topic on Investment School this evening is looking for opportunities at a time of great change, so artificial intelligence and energy, amid all of the political shifts that we're seeing at the moment. More from Investment School in just a moment.
The Money Show.
Investment School.
With Viv Govender, Portfolio Manager at Rand Swiss, and Stephán Engelbrecht, Portfolio Manager for Mazi NextGen at Mazi Asset Management, talking about how you make money at a time of opportunities in artificial intelligence and energy, during political shifts, and particularly after the chaos of this last week. So, Viv, it's one thing to survive, to keep your shirt in these moments and to not lose a huge amount of money. How do you actually make money? There'll be someone who might claim to own shares in DeepSeek, but how do you actually make money during a time like this?
Well, I think if you're looking at this, not in terms of the AI revolution, but in terms of just a technological paradigm shift, like you saw back with the internet or you saw back with the personal computer, and look at what the strategies would have worked back in those days. And, before the interview, we were discussing with Stephen, basically what would happen, if you had bought into Amazon, etc., back in the late 1990s. And the strategy that you would have basically wanted to do was, if you believed in technology, you would just buy and you'd hold. And so that is the kind of philosophy I think that you'd want to do here. You don't want to be basically selling your winners and buying more losers. If there is a winner, and this is a revolution on the power of electricity, the internet, or the personal computer, you want to be holding on to these gains and holding on for a long time.
So you want to sort of, hang on to them for a while. Stephán, would you agree with that? I mean, this is a game where you've got to make your bets and then stick to your bets while everybody else is losing their head.
Well, Stephen, I took a bit of a pivot there on my career. I've realized that I'm not clever enough to do to change your portfolio accordingly. So I actually jumped onto the AI bandwagon and decided that the best way to probably manage your portfolio is to let the machine manage the portfolio for you and do the analysis for you, and you can just sit back and trust in the programs that you've developed to hopefully help you through this period.
And so far that's working.
Yes.
That was interesting to hear that. Okay, so Viv, there'll be all sorts of people who will be saying you can make money using this. There'll be a risk as well, because there are some people who will say invest in the next DeepSeek, it's this, and obviously it'll be nonsense. All of that stuff will start. Are there certain fields then? So obviously artificial intelligence is one, energy is another. If you accept that, you're still going to have the energy needs. Are there others that are sort of obvious that you're seeing at the moment that, will be around and doing well, partly because of these other shifts that you're seeing, and are sort of immune from the kind of Trump effect?
I think the next thing is going to be physical AI. I think Jensen Huang at NVIDIA has talked about that. Elon Musk in his recent Tesla presentation mentioned the fact that they're looking to basically start producing these Optimus robots in the next couple of years. Obviously, again, Elon Musk timelines, you never know. But I mean, if you look at the prospective marketplace of a robot, an autonomous robot that can perform even simple tasks, let alone complex tasks, that would be something that would rival any industrial revolution in the past. Electricity, the steam engine, it'll be up there with that. And I think if you are brave enough to look into those things, there's opportunity to be made there. And obviously, the Teslas of the world are very attractive if that's the case, but obviously very expensive. But there's also other opportunities out there in the robotics space, I think. And if robotics work, energy will come back into play, and so will copper and all the other raw materials that are used to build these robots.
Yeah, I see what you mean, and I suppose you've got to just sort of, keep an eye on how these things are changing. Stefan, I mean, some people will be wondering what comes after AI. We're all talking about AI now. There were some people who would have seen that, the internet was going to produce an Amazon, and they would have sort of been very early in getting into that sort of action. But, I mean, for the moment, everyone's looking at AI. Is this a moment to also just try and see what else is kind of happening, what else could come next, or some of the other applications that suddenly could become hugely valuable? I mean, there'll be someone somewhere who's going to say, well, South Africa is going to need so much solar power, they're going to buy land in the Northern Cape. I'm talking about that kind of blue sky investment.
Yeah, well, I agree with you on the application part. I think we are moving into that phase of the AI revolution, if you want to call it, or evolution, and now it's time to go and see which companies are going to benefit the most from the efficiencies that artificial intelligence and machine learning is bringing to the world and the business in general. That's as I mentioned, there are some interesting developments in healthcare, in finance, in agriculture, where they're starting to apply AI, and where the productivity gains can be significant, and it can actually change the sector as a whole.
Yes, I see what you mean. And I mean, Viv, this goes back to a point you were making earlier. You've got to look for the applications. So this then takes us to another question, which is that if one is an AI optimist and presumes, as many people do, that this is going to be good for humanity and lead to, sort of strong economic growth, there are plenty of ways to make lots of money. If you are an AI pessimist and you're worried that actually it's going to lead to job losses, or there's going to be other issues, or it's going to get very competitive, or it's going to be, and you mentioned this earlier very briefly, used really for military purposes, well, then it's going to be much harder to make money. So this is also a question about whether one is optimistic or not.
Yes, I mean, if you talk about AI pessimists, there's actually people who are called doomers, who don't just believe it's going to be bad for jobs, they believe it's going to cause extinction. And this is not a minority view. I mean, if you looked at the guys like Geoffrey Hinton, who won the Nobel Prize for creating AI, who's called the godfather of AI. He's not the only one that created it, but he's obviously a formative figure there. And he has, I think, a double-digit percentage chance that AI basically causes human extinction. So there is a very uncertain future ahead. But if you do think that this technology will be positive, and you do think that it's going to basically be world-changing, like I said, the philosophy you've got to be is that the gains are going to be larger than you think. And therefore, if you do buy into something, don't just be thinking, okay, this is doubled or tripled. Don't be the guy that sells Bitcoin at 1,000, if you know what I mean.
Yeah.
And don't be the guy that sells Amazon basically when it just went up 5 times or something. So this you want to be buying and holding, number one. And number two, you basically, like Stephen has said, you want to be looking at the applications. I mean, for instance, you're looking at driverless vehicles. And yes, that's obviously going to be important for, transport, but it's also going to be important for things like retail. It's going to be important for things like property prices, because it changes how people view the physical space that they live in.
Yeah.
And so I think you've got to have a broader mind. I mean, who would have known what Airbnb could have been, or Uber would have been, basically, when people first started, sending emails?
Yes, now I know what you mean. Well, and of course, if there's an extension, it doesn't really matter how much money you have. Stephán Engelbrecht, thank you, Portfolio Manager for Mazi NextGen at Mazi Asset Management, and Viv Govender is a Portfolio Manager at Rand Swiss. An end to Investment School this evening.